Welcome everyone to this episode of Freedom Hub's Working Group. I'm your host, Jeff Cantor, along with my co-host, Charles Froman. We do have a couple of great sponsors we'll talk about here yet today, and also to let you know that we are the location for all the activists and others that are trying to disrupt this world to try to get a little improvement on everyone's life, as it were. We want you to know that these are being recorded and they will be archived every Sunday by the end of the day typically, so by Monday morning, videos will be up at all of these various sites. If you're not registered to get a weekly notice about this, you can register at the link up at the top. And also mentioning the fact that we have some sponsors, we do have one really unique one here where we found the only bioactive, as we've been able to find, hemp product, which most people don't understand even what that means, but I would encourage you to get to the website, heavensendhemp.com. Take a look, you'll see what the story is. And what's been really killer is we were able to get a special discount. Instead of 5 or 10%, you get 15% off if you use the Your Freedom Hub number 4. So that's going to be pretty exciting. Now, just before we get into our guests for today, let me show you this. We do have our own LinkedIn page, so you might want to try to participate here. As I said, the videos are all recorded. Here's an example of some of the preceding ones, and you'll see there's an awful lot of them, and they are exceptionally good. So I would tell you anyone you pick, you'll quite like. And then as far as for finding out about future events and so on, we have this special website of ours now, MP for Marketplace, healthwealthfreedom.com. And the information as far as the sites, when you go under the home screen, that second tab, information events, that's this page here. So you'll see this is talking about this series that we're on right now. And here you'll see to the left, here's the one for today. So John's our guest. We'll come back to this in a minute. And then we have another one in the evening at 7. So we do 2 on Wednesdays. But here you'll notice down here, you can register. You can click here to listen to continue the conversation. So after today, if you have more questions and things you'd like to pose to John, we're going to keep that going. And then also we're going to come back to this, but we'll show you who we've got coming up. And again, here are all those links to look at the archives. So although for today, let's back up here a minute. Let's talk about today as an example. So this is a very interesting one to be sure, because John's here and he's going to give us a little rundown on currency and digital currency. So Charles, if you want to do a bit of a intro, would be great.
Sure, Jeff, and welcome, John. We had John on last year from the Competitive Enterprise Institute talking about financial deregulation, or more appropriately, the overregulation that really hurts the opportunity of the financial markets at large. He can kind of remind us what he discussed last time, but it had to do with some of the Graham, Leach-Bliley, or Sarbanes-Oxley overregulations that hurts modest income investors. And today he's going to talk about some of the implications of the aggressive central bank we have, the Federal Reserve, and our government regulatory bodies at large, how they're crowding out investments, they're leading us into debt, and most specifically, with currency, they're proposing a government digital currency that could crowd out some of the innovations and hope we have for the private market of cyber currency like Bitcoin, or at least overregulate the private market that is growing such that it becomes a source of government surveillance, and we're all concerned about privacy. Also, as an aside, John's going to mention a different project that he has been working on, a book on our founding father, George Washington, and what an entrepreneur he was, which is also timely because with the property destructing protests going on nationwide and the erasing of history, it's important to remind ourselves why there are monuments to all these characters in history, and they're not all bad for sure. So that's our introduction, Jeff.
Perfect. And I like the fact you chose the word characters, because that's what they all were. No one who's a character is perfect. They have all sorts of interesting quirks, but overall they were fantastic. And that's the important thing to remember. You're totally right. So John, I'm giving you the floor here.
Yes. Well, thank you. Thank you all for attending, and thank you for the very kind introduction. I am from my bookshelf at my CEI office, which was which we are now, which we out of prudence, we can now go to twice a week. We were I'm here at the office today. But I've been doing a lot of work, probably as some of you have, from home, both due to prudence and some government mandates, many of which have gone too far. But we have the technology, at least like Zoom, to work from home, and there's no technology or innovation that the government doesn't want to take over. And as Jeff and Charlie said, I'm here at my bookshelf, and here is my book, the link to the Amazon page, George Washington Entrepreneur. One of the things I write about, in addition to his innovations as a businessman, from everything from the whiskey distillery to branded flour mill to breeding mules, being the first in America, were some of the regulations, in addition to the taxes on even small scale manufacturing that the British did, and cracking down not just on states issuing money, which was inflationary, but on some of the private money. Like, one of the things that was issued there really wasn't a centralized currency, but they were very innovative, of founding fathers in that generation, at using things like tobacco warehouse receipts that are good, for tobacco, or that actually became tobacco notes and circulated as money. So private money, from that to casino and arcade tokens, is really nothing new. Now it's in electronic form. So again, another plug for my book, George Washington Entrepreneur. But the Fed is now acting like, well, first of all, they're acting, saying that they can innovate better, but then they're saying, aren't these innovations terrible, that they can that some people will have them when some people don't. I mean, that's the history of everything, that they can enable criminal activity. I mean, but so can the airplane. It depends on how you use. We have things like the Fourth Amendment and a measured view. And they're like, because the private sector is doing this and there's so much volatility, the federal government needs to take over. That's what Fed governors such as Obama appointee Lael Brainerd are saying. And this has especially been pushed and used for during COVID-19, when people were afraid at first, cash being contaminated, and the slow payments, or the PPP loans. That wouldn't it be great, the proponents are saying, if the government were just to have its own digital currency or payment system to speed this up. And but we don't want necessarily speedy government anyway. But one thing it will also do is, and it already has done, even the talk of this, is to slow private innovation down. And so this began, although the push has accelerated with COVID-19, it began even before that one of the issues was the fact that you could send a check through PayPal or Venmo. You could send money, but it could still take hours and sometimes days to settle into something like a bank account. And instead of looking at the ways, the government's own barriers, such as things like, the Fed does control settlement systems such as FedWire, which is, sort of keeps bankers' hours and is closed. They said, well, we don't need to limit or fix what we're doing. We need to go into this further. And so in August of last year, the Fed announced it was competing with the private sector, something called the clearinghouse, as well as crypto forms of payments called FedNow. And it's to me, that's a scary and ominous tone, where the Fed is setting up its own processing of real-time payments and it's not going to be available, but they're saying it's not going to be available there until 2023 and 24. The private sector was already doing this with some banks in the clearinghouse and had set to be finished actually by this time now. But now banks who are regulated by the Fed are saying, well, we may want to, the Fed is saying this is voluntary if banks want to buy this, but they're the bank's regulator, among other things. So guess what? Banks are just, kind of reluctant to go on or continue with the private system if the Fed is now offering the system, even though there are now, FedNow just came with an update, all of these expensive technology upgrades that have to be done. And but that's not the worst of it, because the Fed and it was revealed last week. Again, Fed Governor Brainerd said that the Fed is considering central bank digital currency, which has been also called Fedcoin or the digital dollar, and that the Federal Reserve Banks of Boston, in conjunction with MIT and of San Francisco, are looking at this. Now, you've also got some nationalist populists pushing for this, is, that China is going to digitize the yuan, and so by God, we need to be like, we need to beat China, so we need to be like China and compete with this, ignoring the fact that even if you were to do business in the dollar, the stable coins and the development from crypto would do this. But China explicitly, and people gloss over this, is wanting to use its digital currency to spy on its citizens more, to use the social credit system where people get access to money and credit, and given the state, the lack of privacy and anti-money laundering laws, others, the Fedcoin or the digital dollar from its very setup could be used as a tool for even further violations of the Fourth Amendment. Now, want to make it clear what the digital dollar is, because I see some of these comments and from every piece written about the digital dollar that, well, don't we have a digital dollar with, Venmo, PayPal, and other things? The dollar, if you want, can be used digitally, and it can. But what the proponents are talking about is where you have the government maintain a system would actually, I mean, we those of you involved in crypto know there's the whole issue of, having a blockchain keep record keeping to prevent the double spending problem, so that, the dollar, like a physical dollar, can't, or piece of gold, can't be used twice, that two people can't have it. So really, if the government were to become the operator, it would have to maintain a custodial wallet, or consumers would have to have accounts with the Federal Reserve, or the government would actually maintain the blockchain. In either of those scenarios, the government would, if you were using a digital dollar or Fedcoin, the government would have access and would be maintaining those transactions, and know, like your bank knows exactly what for every second of the day you've taken out of the account and what you've spent it on. So and some of these are, and for some that's even the explicit goal, and they say they want to this goes along with proposals to tax transactions with paper currency, or put fees. Michael Bordeaux of Rutgers has proposed this, but even Lael Brainerd, who said she was considering this, she had, I'll try to find it here, she gave a very apt description of what exactly the Fed, I'm sorry about the picture fading, issuing digital currency would entail, and I'm just trying to find it here. That central bank digital currency refers to a new type of central bank liability that could be held directly by households and businesses without the involvement of a current bank intermediary, and it would be it would keep a running record of all payment data using the digital currency, a stark difference from cash, and it would be a system in which individual payments information would be recorded by a government entity and would mark a dramatic shift. I'd say it certainly would, but she says the Fed is still considering that. They've already accelerated with FedNow. I mean, in addition, it would you have with FedNow, the payment system, the conflict of interest, that even if it were voluntary use, the Fed is the regulator for a lot of banks. It has ways of hard and soft coercion. And progressives have already proposed using digital currency to do things like distribute the universal basic income and do the modern monetary theory, which is neither modern nor a good theory. Which just letting inflation run wild. And this would also just increase the pressure to, it could create bubbles as far as, people wanting to go to the government currency, and, create pressures as far as crowding out innovation from, by encouraging crackdowns on private sector developers, or sort of co-opting them with their vendors for the big government currency. And it just gets to the question of why exactly do we need this? And I'd say we don't. That we have ways of the double spending problem of reducing transaction costs, of speeding up transactions and the movement of money through crypto, and now with stable coins that can be pegged to a currency. It's you can deliver dollars through potentially like Tether or Facebook Libra. And as far as, well, there's also some as far as the populist nationalists arguing that we need this to counter China and for the U.S. economy to compete. But Venezuela had an experience with digital currency called the petro, and it could not overcome the problems it was already having. So people spend in an economy because of what, or attracted to the currency because of what the regulatory climate in the country. A country's currency doesn't. A country's currency to an extent does. There are a lot of factors, but it does strengthen both because of monetary policy and of other factors where people want to invest in an economy. And so this is, I would say, I'm in the Fed camp, but we've got the system now where you have the Fed printing dollars, and it's printing a lot of them. Plus, where we have the choices of cryptocurrency isn't. That at least offers some choice, but the Fed is looking to. And proponents of this are ultimately looking to either they're looking to end these choices or are pushing a system to end these choices. And some of them, like Brainerd, have in my paper, government run payment systems are unsafe at any speed. Because of the play on Ralph Nader's on the Corvair, where he claimed, and falsely, that it was unsafe at any speed, that they actually will say that Facebook's Libra prompted this, and they raise all these concerns about privacy thank you, Jeff, and Facebook Libra, that privacy, lack of competition, and yet not even noting that well, aren't things like FedNow and Fedcoin, digital dollar, going to have the same problem? You have an incredible lack of privacy with those. The government directly knows what you're spending. It crowds out competition. It has the government's resources behind it. And yet, where is the caution there? There was actually an article in Forbes that says, go slow on Libra, speed up on FedNow. That, you know, hit the gas pedal on FedNow because we have to do this because the private sector is doing this. I would say no. You know, watch what the private sector is doing and slow down, and then maybe adjust it accordingly. And there are some fears, like with Facebook Libra, because I should say Libra is developed by Facebook, but it's so big. But I think the result of, you know, when that was introduced, that's when you saw all cryptocurrencies, Bitcoin, Ether, others, actually going up. And what is Bitcoin now? 11,000. So that showed, you know, I think there is still plenty of competition in the private sector with, you know, stable coins like Tether to just, you know, a Bitcoin and Ether and others. And that's what, you know, so whether it's, you know, progressive calls or nationalist calls for Fedcoin, digital dollars, central bank digital currency, I mean, I think the answer is, as well as FedNow and government-run payment systems, the answer is just say no. And you can read more about these things in, you know, our website, CEI.org, and my writing. And I will now open it up to questions.
Okay, John, that was very good. I definitely see we're going to have some questions here, and I got a couple just to kick it off. So first off, you know, you're describing what they've got afoot, and, you know, obviously we can use everything that's already currently available. What else can we do as individuals or citizens to kind of either thwart this or grassroots do something different to make a change?
I think be aware of this and alert your neighbors that, well, one of the things, if you all are involved in the crypto community, it's very important that you know, for some of the more non-ideological crypto enthusiasts who can be persuaded, who aren't necessarily libertarians, they may be leaning. Some have seen this as sort of a blessing for, you know, the government's officially blessing crypto. There's financial things. They're saying was saying, well, my cryptocurrency is going to go up, but also there's thinking that it would be just a better world, that, you know, maybe because, you know, I talked about last time some of the SEC regulations on crypto, where it's, you know, they don't have there's no way most crypto is a security. They don't have the statutory authority that say, well, maybe this will mean the government will leave it alone, leave more crypto alone. It's like, no, they're not gonna. They want the goal of many of them, and even for those who don't know, there are most people among the elites who are advocating this know what they're doing and basically want to monopolize the sector. That those who are pushing it, monopolizing the sector, and it will lead to, if you have a government-backed currency, there's no government-backed currency that hasn't tried to push out other private currencies or private ways of trading. So just saying this is not a blessing for private crypto, this is a threat to it, and just communicating that, like in forums and web chats and other things, that you want to do that. I mean, remind people, I see my George Washington entrepreneur, of that private currency is a part of our history and has existed alongside successfully the national currency, from everything from things like trading stamps that you got from grocery stores in the 60s that were traded, that people were ending up using in the black markets, and everything from mortuaries to brothels. In fact, Warren Buffett's first business was blue chip stamps among trading stamps. It was one of the first businesses that he outright businesses that he bought, and to arcade and casino tokens, to some of the stones in the really early days, to tobacco warehouse receipts in the colonial days. So remind people, on the fence about, and even try to convince people who are on the other side of the fence, our long history of private currency and the government-backed or government-controlled cryptocurrency or payment systems would be a threat to that. And that, so if you're in crypto forums or other things, just, say that. And in fact, if you want to call me or email me, jberlau@cei.org, @jberlau on Twitter, I can help you do that. I can help you come up with some arguments, and I'd be willing to speak to the group if you'd like me to, and if it clears with my schedule.
Very good. What's your thoughts, in terms of like something we can do? So that's kind of sounds like just putting the word out and keeping everybody abreast of what's happening, but not so much like actionable things I can do. What are your thoughts on something like this, which is I'm sorry, I got the wrong page here. Here, to be able, this is July 8th, which the pre-ordering these Nevada gold backs. This is the attempt to capitalize on the Utah rule that gold is money and so on. They've created these accounts and services where you can actually participate in all this and use this as your actual account. They have where you can go to the ATM and you just be able to use this as your checking and bank account, but it's all gold and silver based. Have you got any thoughts on this type of approach, or if this is something that's good for us to try to react to?
I would encourage, now just one question before I talk about this. Is this something that's controlled by the state of Utah or Nevada?
No, they passed a law to allow gold and silver to be legal tender, and this is a private company that's launched to take advantage of that.
Okay, it's a private company.
Yeah, so what they're saying in here, real quick, just before you kick off, it says here, the Goldback project is booming. We are the first to commercially retail the Utah Goldback, and so that's what this really kind of boils down to is, and here you get to buy a little bit, 1/10 of a troy ounce. So you get to buy it like in small increments instead of being like a giant gold buyer.
Okay. I certainly encourage private sector innovations of that sort. I can't recommend, without knowing more fully about it, specific products here. But I mean, I certainly, the private sector is innovating. And if you innovate more, I would think, and this is what CEI's founder, Fred Smith, called, values-based communication. It's not one or the other. While you're doing this, explain, why something like, why the government-based fiat money is a threat, but also why Fedcoin or central bank digital currency could be a threat. So do both. Develop, innovate in the private sector and explain, the dangers of government action, from over-regulation of the crypto sector to the government developing its own currency that could crowd everything out, and as well as invade privacy and cause all these other problems.
Charles, I see you have a question for us.
Sure, Jeff, and great talk, John.
Thank you.
We have another Jonathan, in the participants, who I think has some involvement, Jeff, in digital currency. And if he wanted to unmute himself, I'd be curious to see his response to John's talk and maybe tell us a bit more about his involvement in digital currency and how the Fedcoin would impact his business.
Yeah, I have a lot of thoughts. It's a very interesting topic. Thank you, John. I was involved in Bitcoin starting in 2013, so I've really watched the space develop for a while. I actually have a different opinion on the Fedcoin. Through its development with the MIT, it would be open source, and so the entire code base would be able to be validated by the community globally. But I think the Fedcoin and the dollar is not actually a store of value, and I think people are recognizing that. So really what the Fedcoin will provide is an on-ramp into crypto. I don't see why people would hold their money in dollars. They already don't, if you look at the velocity of money, right? So yeah, how it will affect my business, more crypto on-ramps. So, I mean, everything is just going to head towards hard monetary assets, such as Bitcoin and other cryptocurrencies with a hard cap supply. Yeah, do you have any questions for me beyond that?
Well,
I'd love to have a discussion on this.
But we can, and we can take it online. I just don't see any evidence. When I look at what Lael Brainerd and other people on the Fed are saying, they're not saying, oh, you can use your government digital wallet to invest in Bitcoin. I mean, they're clearly trying to sway people away from using cryptocurrency, from Bitcoin to Libra. There's still the issue okay, I don't know. And if you want to show me something, I mean, the Fed just announced last week they're partnering with MIT, and they're considering what MIT is proposing. If you have some documentation, could show me, but it's sort of like, open source, it's like a side issue to the fact that the government would be if you spend your digital dollar, would know exactly what you're spending it on and how much you've taken out of the Fed custodial wallet or Fed account with the Fed. By the way, this was proposed in the House version of the CARES Act and almost passed, some things like just on a limited scale, but would still establish Fed accounts with the Fed. So, I mean, I still see it as a danger, and I don't see that it being an on-ramp where it could encourage private sector cryptocurrency, that especially when some of the proponents have explicitly saying we need this to discourage this. But I will look at what you have and what you propose, and then let's continue this discussion.
Perfect. Yeah, I just I mean, I've been very involved, and I know a lot of other competing currencies to dollar-based currencies, as far as creating a stable coin that isn't pegged to the dollar, or at least not pegged to the Fed dollar. So there is some interesting developments on that. Something called Ampleforth. I would recommend to look that up. I can send you a link or reach out to you privately, either or.
Right. Well, let me put it this way. There's nothing wrong with private stable coins from, what I guess what Libra is projected to do, or Tether, that would do one currency like the dollar, as long as because there, consumers still have the choice. They could use that cryptocurrency pegged to the dollar or to other currencies, or to use one with its own system. So that's just, there's nothing wrong with a private cryptocurrency pegging it to a government currency. It's when the government starts with its own digital wallets and Fed consumer deposit accounts is where the trouble gets into. So that's my view.
Yeah, it all has, so blockchain technology relies on something called private and public key cryptography.
Yes.
So if all that, what you're talking about, would depend on how the private and public keys, or more importantly, the private keys are architected. If the Fed has a superseding private key that they can go in and do transactions on someone's behalf, that would be a big problem. But because this would be developed open source, people would be able to validate that. So that is that way. But you could actually create you could architect this in a way where no transactions were able to be viewed by the Fed or any other person unless you had basically like court approval. And if you did it in that way, where basically you had like a bank account in or you had like a Fed wallet through a third-party intermediary, then you could have some type of court order, and then you could open it up with a particular special key that once that is accessed, you could broadcast that you're accessing it. So there is ways to architect this in a way where it does away with, that kind of like scary, kind of, they're looking at every single transaction type thing. So something like Monero, I'm sure you guys have heard about, it's mathematically impossible to see transactions.
Okay, well, given what the government is, everybody from Bill Barr to what John Kerry did, wanting to crack down on encryption now, I don't really think they'd go for that type of system. but I really wouldn't understand what that gives to consumers or any advantage over the private cryptocurrency system we have now, even if such a thing can be done.
Yeah, so like I said kind of initially, it really provides more on-ramps. If everyone has a crypto wallet right next to their normal fiat wallet or whatever, then you can easily convert back and forth. That type of architecture mimics exactly what China is doing with their digital currency electronic payment.
Okay, well, China and observers have said, if you're talking about the digital yuan, that it's going to be utilized in some of their state surveillance, like the social credit. Is somebody? Am I talking over somebody? Hello?
Sorry about that.
Oh, okay. I mean, China is. I mean, there are articles written about that this will be used. I mean, China for even more surveillance on its citizens and for other things. So there might be some good purposes. There might be some even innovation. It might speed up things a little. But I mean, is it worth the price? And is it worth the price if the private sector already can and already are doing things like this?
Well, so blockchain technology, as you probably know, the reason why it's so innovative is because it eliminates the need for third parties, because the payment and the payment process and the settlement actually happen in itself. Like John stated, this is the actual thing that does away with the double spending problem, because I can't settle a transaction and I can't process the payment if the transaction won't settle. It will be rejected by the blockchain. Or excuse me, by the miners who validate the blockchain.
Interesting to be sure. Kishore, I see you got your hand up.
Okay, so my question is about microtransactions. And when I last investigated this issue, there was an opening people had found for using digital currency for doing things like buying and selling solar power, for example, or your data, personal data, which could be aggregated. I don't see why anyone would trust government for anything, least of all Chinese government. So what I'm trying to ask is, do you see that as a possibility where, private digital currency find an entry point in microtransactions?
Yeah. So the Chinese digital yuan, which is also known as digital currency electronic payments, is going to be the on-ramp for their blockchain services network. So their blockchain services network is basically in the process of being launched. One of my business advisors works for one of the 16 companies that's developing in that. He has a class 1 visa to go back and forth. But anyways, so the China blockchain network, they're creating a private China only, and they're creating a worldwide global network. Their global network will actually hook in to, at its launch, it will hook into 6 different public blockchains that are public. So they're not actually owned by China. You have Ethereum, you have Tezos, you have Nervos, you have IRS.is and Neo. Neo is actually more of a Hong Kong one. It's more architected around the Chinese stuff. But Ethereum, I'm sure you've heard about. That one has, so you have Ethereum, which is 1, but it actually goes out to 18 decimal places. So within this whole thing is absolutely what you're talking about: streaming payments, data aggregation, and all of that is done through these private blockchains. Basically, the Chinese blockchain network is just a hook to hook in their digital yuan. But streaming payments and purchasing solar power data and that type of stuff is is absolutely, that's just kind of the basic stuff of what we're doing here.
Yeah, so if I can ask a complimentary question,
Sure.
the resurgence in Ethereum lately, apparently it has a greater momentum than Bitcoin, has been attributed to its ability to do transactions. Are you able to comment on the validity of that argument?
Yeah. So Ethereum and Bitcoin are actually two fundamentally different types of cryptocurrency blockchain networks, whatever you want to call them, label them. So Bitcoin is basically, it was the initial one. It actually has a lot of history, but it was designed around the Austrian school of thought sound money principle. So we have a max supply of 21 million. Each Bitcoin is divisible to 100 million pieces. These pieces are called Satoshis. And so right now, $1, you can purchase about 8,500 Satoshis. And so that is Bitcoin. Ethereum is different. Ethereum, I would describe as a decentralized AWS. So if you understand AWS, it's a cloud network computer architecture. And that's essentially what Ethereum is. Ethereum is a Turing complete decentralized global computer. So you have different use cases. So Bitcoin is sound money. It's the store of value for this digital economy that's emerging in parallel to the old economy. And then you have Ethereum, which is this decentralized computer, which provides utility for these digital assets.
Fascinating. And for that reason, it's more usable for transactions? Is that what you're implying?
Yes, it has more utility, but it has a very specific use case. So Ethereum has the ability to do smart contracts. So you have ERC20, you have three different token standards right now. So you have ERC20, you have ERC721 and ERC1155. And each one of these token standards are kind of like the ISO standards, trying to mimic that, I guess. But essentially, what this has allowed is you can actually build tokens on top of Ethereum. So that was these ICOs and the ICO boom in 2017 is because of the ability to tokenize things. So do you understand what I'm talking about, or would you like an example?
Yeah, example will help, especially the last point. I could understand what you were saying earlier, but this last point, I'm losing it. Okay,
perfect. So I found the paper gold note thing that you presented very interesting. That actually was tried before Bitcoin was launched, but once it got too big, it was actually seized and shut down by the government. So I don't necessarily see that as a viable option. Something that I do see as a viable option, though, is there's a couple different cryptocurrencies that actually are contracted to equal a certain amount of gold, say like 1 ounce or something like that, or one gram, I think there's one. And so what you have is a tokenized contract where a third party validates gold deposits, and they hold gold in a safety box, and then they issue a cryptocurrency token, token money. As you recall, if you've read the theory of money and credit, you hear a lot about token money and commodity money and that kind of stuff in the mid 1800s. Right. But so you have token money or token commodity money that is equal to a certain amount of gold. And so there are multiple cryptocurrencies that are ERC20 tokens on the Ethereum network that are these things. But Ethereum is the currency to pay for transactions in this decentralized computer. So you don't necessarily hold value in Ethereum, but you can hold value within these token networks that are built on top of Ethereum. That's kind of how I would look at that.
Interesting.
A little still confusing, but a lot clearer than it was a minute ago.
Well, cryptocurrencies were supposed to have their own way of building trust, independent of gold. So I'm kind of surprised that you have to use this collateral gold. And so it's like, in a way, all the validation that goes through multiple people participating in it, does that go out of the window?
Absolutely. You still rely on a third party of trust. I don't have any of my money in this because that is exactly what I think. All of my money sits in Bitcoin and other hard digital assets. And Bitcoin is the reserve currency in this network that's developing.
Yeah, that's what it would appear has been the case over time. That's very good. Jane, I see you got your hand up.
Yeah, I mean, I think he was just answering my question there, because I was going to ask where they suggest to invest, what type of Bitcoin, or I've heard of something called Ripple or Ethereum. Is there anywhere that they suggested maybe if you had a little money to sock aside, where to direct that?
Bitcoin is the reserve currency. So that is your store of value. That is like buying gold in the 1800s, in the 1500s, in the 1100s, before the Byzantine Empire collapsed and it moved to China and Florence, right? So Bitcoin is digital money. And if you understand what money is, gold is the only money that's ever existed, but it's physical. Now we have something called digital assets. And so you have the ability to create digital scarcity. And Bitcoin is that asset.
Real quickie question on the way out, since it is a limited thing, which creates that scarcity, is the number they picked, now that time has gone by and you can look with hindsight, is that a sufficient quantity of Bitcoin that it's limited to moving into the future?
Yeah, so I wouldn't necessarily focus on 21 million. So like I stated, there's 21 million Bitcoin ever going to be in existence forever. That last Bitcoin will be minted about 130 years from now. So it actually has a decreasing issuance rate, which is why it's the hard money and store of value. But each Bitcoin is divisible to 100 million pieces. So you can divide that to 100 million pieces. But because this is digital, you are not limited by the physical constraints of these old physical monetary systems. Gold can only be divisible into, it's limited by atoms, and it's really limited by what you can touch and what's tangible and what you can validate by the third party. But Bitcoin is limited by mathematics. And as you understand mathematics, you can divide something infinitely. So you can create a contract on top of one Satoshi, and you could say, okay, Bitcoin's divisible to 100 million pieces. Well, let's just take one Satoshi and make that divisible to 100 million pieces and create another currency on top of Bitcoin. And so just like the Bretton Woods Agreement was to have, gold as the store of value and the dollars, being the reserve currency that other people held in their banks, and then you set the currency on top of gold, just in that same manner, you can use Bitcoin.
That's a great way to frame it. Charles, we got time for that one good last question there.
Well, I was going to ask John, if he's still on, Berlau, how he thinks the Fedcoin would threaten Bitcoin and others as a store of value and a hedge on the chaos of the market. Getting back to the original topic, Jeff.
Okay. I'm not sure. It looks like we've got a disruption in the connection. He was a little shaky to begin with there. So
maybe Jonathan can comment. How does Fedcoin impact the move by so many folks to encourage diversification into the Bitcoins and others because of the chaos in the market?
Absolutely.
Maybe Jonathan.
Well, I mean, as I kind of stated, because Bitcoin has a limited supply and a hard cap, you can't really, print more of it or anything like that. That when you look at a dollar, we all know that the Fed just stated that they have an infinite supply of dollars. So if you have an infinite supply of dollars in the market, we'll just, according to Gresham's law, right, the money and value system is just going to flow to the better money system. So just by Gresham's law, money will flow into Bitcoin and then these other scarce digital assets.
Very good.
And how would you look at Fedcoin based on what Mr. Berlau presented today? How should we look at Fedcoin's development going forward?
I would be really, I would look on how it's architected, because how it's architected has the ability to be that kind of draconian Orwellian system where you look at every transaction. But if you were able to have private transactions and then through the courts, then you were able to expose currencies based on the various laws that we already have in place, as far as like KYC and ALM laws. If you had that type of two-tier thing where you have to have court approval in order to expose the transactions, then I think that would be something that's very favorable, because it would be like this on-ramp. If you had the Fedcoin where every single transaction was validated, and you can go, if any government sanctioned third party can go in there and just look at whatever you want, that would be something that would sound alarm bells across the entire crypto landscape. And because they're developing with MIT and the open source nature of that, anyone would be able to validate that for the most part.
Very good. Well, that's a great place to end it for the day, because unfortunately we've run out of time. But boy, what a hot topic this is! As usual, another great week with another hot area to be addressing. So we will definitely, and that's partially why we've begun this, take the conversation offline, because we really want to keep things moving to stimulate what we started today, but to not just let it die at the end of this event. So Jonathan, thanks for chiming in. John, fantastic. Appreciate all you guys being a participant.